What's up, everyone? Coming to you live on YouTube. Once again, I see a few of you have already joined. Hey guys, thanks for joining. I see some of you in here with your messages. Um, Again, we're just a minute or two away from getting things kicked off, so just bear with me. I appreciate you guys joining early. Just gonna do a quick sound check again. Um, is the lighting okay on this? Lighting is a bit different this time around um, than usual. I don't know if it makes any difference or if you guys like it better. Um, I'll wait for the chat to come in. Chat's a bit delayed, always delayed. I don't know why. All right, let's kick things off. Okay, all right. I see the chat's coming in. We'll kick things off first with just a brief recap on coronavirus stuff, and then we'll get into the market stuff. Obviously, just kind of what we do usually. We are in a coronavirus market, so of course we need to make sure that we're touching up on how that situation looks, and then we'll move into the markets. I will say again, please hold off on the questions. I will try and address all the questions as we continue to go, and then once I complete the recaps and everything I want to say, then I'll address the questions. All right, and I promise we'll talk about oil, we'll talk about current futures, etc. Okay, so hang tight. Let's kick things off, everyone. Thanks for joining another market recap I'm doing on YouTube. Uh, especially since we're in a little bit of an unprecedented time the last month. I mean, if you recall, end of February is where things really started to go haywire, right? Take a look at February 25th. We had that big gap down. Are you going to zoom in here? I've also highlighted my thesis and suboptimal theory and whatnot that I just kind of touched on last time, but I'll go over it again because quite a few things have changed. Before we do that, though, let's quickly go over some coronavirus numbers. Last time I mentioned that we had just cracked the 1 million mark. I think we were at 1 million, 1.2 or something. And look at it. And I said this is gonna go up exponentially. It's gonna go up a lot faster. And here we are. This is from today, just an hour or so ago. So we're at about 1.8 million, cases so far worldwide, and we've got a good amount of recoveries, but we also broke the 100,000 deaths globally, right? The U.S. now has the most amounts of deaths, and I'll touch on that as well. Before we do that, take a look at current cases, closed cases compared to active cases, right? And you can see the 113, nearly 114,000 deaths, right? And currently there are about 50,000, let's just say 51,000 in serious or critical condition, whereas about 1.26 million of them are, mild. Okay, so we can see the curve is still going. There has been talk that there is a flattening of the curve, all right? And I do see that happening, albeit slowly. It's not going to show in here, but there is a tapering off in growth of cases. And sure, the U.S. is still kind of growing in this sense, but we have countries like Italy, Iran, of course, China. Although to be honest, I don't know how much I believe. Well, actually, let me be straight to the point. I don't believe Chinese numbers in terms of what they're reporting here. Take a look at the total cases, total new cases compared to the prior day, and then the total deaths. Right, U.S. has gone above Spain. Italy was is the worst here, and U.S. has overtaken that. Right, in terms of total cases, in terms of deaths, we had a lot of deaths in the U.S. just the day prior, right? So this is something that's really alarming, but this is nothing that should be surprising you. I mean, I've been talking about it now for, I think this is the fifth week, I think in succession that I've been talking about coronavirus cases. And I think since we were at 100,000 cases or something, even before. So it's been a wild ride. This is something that is, I believe, still going to continue. We're going to hit 2 million cases, I think, in the just next day or two. As testing is ramped up, testing is being ramped up. There's more test kits available. So let's see how that shakes out. But there is a flattening of the curve going on a little bit. These next, I said last week, this week is going to be like really important, and it was because we could see the massive death spike over the last day, but also this entire week, right? And I think this is going to continue. Of course, I hope it slows down. I mean, the best case scenario is that it stops, but let's be realistic. We're going to continue to have cases. And we're going to continue to have more deaths, right? As people are in the healthcare system, we just have to make sure that people are not, I would say the hospitals are not overloaded at this time, right? So you guys are all, let's just cut to the chase. What are you guys all here for? You're here to know what the heck's been going on in the market, what's happening now, what the situation is, and where things can go. And last week, I highlighted that. So let me recap for those of you that weren't on last week. I had updated my elite members on March the 31st, okay, in a very brief yet concise thesis and two sub theories that could occur if my thesis doesn't come true. Because that's ultimately what trading, investing, portfolio management is. You have to have contingencies. You can't be rigid. You can't just hold on to your guns because none of us know how markets are going to go tomorrow, the day after, next week, let alone next year, right? But what we can do is try and put all these pieces that we have in front of us, try and put them together and then come up with a conclusion. And if it doesn't play out, so be it, right? I say all the time, people ask me on social media or anywhere, and people say, Riz, what do you think is going to happen this week or tomorrow? I say, this is what I think can happen. And then right after I say, I can be wrong, right? This is the ultimate reality of being a trader and investor. I can be wrong. You can be wrong. Warren Buffett can be wrong, right? It doesn't matter. You can be wrong. This is the nature of the markets. You will never be able to get 100% success rate ever in markets, right? So for me, it's important I outline a main thesis, which right now is not playing out, right? Let's get that clear. It's not playing out. So brief recap. This red arrow I drew here, along with this line, 2200. My main thesis was since March 31st, and even last week I spoke about it, I said maybe the S&P 500 can retrace lower, right? From the start of this arrow, I've picked these arrows starting here because this is where I kind of made that original call. Look at what's happened, right? And I can tell you a lot of people are flustered. I can look at sentiment data. I can look at the news outlets. I can look at people messages me. So I can take various different degrees of anecdotal kind of, I would say, let's just say proof where people are messaging me. I can look at the news. I can look at sentiment data. I can look at what's going on and then tell you that many people are caught off by this rally, right? This is a crazy rally. The S&P 500, if you recall, was about 36% from the lows, right? From the highs. So about 36%, right? Hopefully you can see this. About 36%, 35%, let's just say. And then what happened was we had a tremendous recovery just around, third week of March, right? About March 23rd, 24th onwards. This huge recovery. Remember, these are daily candles, right? Each candle represents one singular trading day. And look at this, right? Green, 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 and big moves up, 6% move up, 7% move up, right? And sure, we had a little bit of a retrace here, but it just took off, right? People took this as a buying opportunity at the 2,500 level in the S&P 500. And I said, okay, maybe, things can go to 2,200 or to 2,100, right? This is not an exact science. And I was saying, okay, I think we're going to get a break lower. We didn't get a break lower. In fact, the market gapped up, on April 6th, last week. It gapped up and just broke through the 2,700 level that I spoke of as well. I said, if the market doesn't go to 2,200 to 2,100, and we do see a recovery and it breaks above the 2700 level, this thing can run. And we saw that on April 7th and the 8th, right? I was a bit hesitant to see where it went, but Thursday, which was the last trading day, Friday was, of course, markets were closed for Good Friday. Thursday is not as bullish, right? And let's take a look as we're talking about it to give you guys some more context. I know it's a funny story. People ask me, Riz, you're not using an ad blocker. I'm not. I'm not using an ad blocker. I should. I should be. But either way, take a look at futures. Right, S&P 500 futures are down at percent and 1.3%. Let's say oil is up. We'll touch on that in a bit. But futures are red right now. This is not unexpected. I will actually share something with you. My elite members know, but I'll share with you again for transparency and kind of really playing my cards and showing you what I'm doing, the moves I'm making, and what I'm thinking, right? Because I think a lot of you, maybe I'm wrong, want to know what I'm thinking, want to know how I'm approaching this, right? So I'll share that with you guys shortly. But ultimately, the main thesis has not panned out, okay? That's obvious, right? It's gone above, the market's gone above 2700, and this is a bullish sign. I said we need to stay above 2700 level for the suboptimal theory to be in play. It's been 2 days, right, since it's broken above. And tomorrow, if futures, let's say, open down 1.5%, let's say, right, let's say 1.5%, where does that leave us? This means we're going to be right around about 27, let's say 2700, okay, to keep things simple. We're going to be right where I've said that critical area is, right? 2700, maybe we get down there tomorrow, okay? Just drawing that for you, okay? So again, we're still in play for the suboptimal theory 1, right? There's suboptimal theory 2, which I frankly would not complain if we got there. I would be relatively happy. Sure, I have a lot of long-term investments, so my investment account would be down, but that's okay. I'm okay with that because I would hold that whether we go to 2,800 in the S&P 500. I would hold that if we go to 3,000. I would hold it if we went to 2,000. So I'm not too worried about that. For me, I'm looking to take advantage of mispricing. And how do we do that? I took advantage when we had the big sell-off right around here. I didn't bottom pick it, but I got very close. And what I also did was I was able to sell into this rally. Right? I was able to sell into this rally. On Thursday, I closed many positions. In fact, I'll share which ones I did close with you, so you guys have an idea what I've actually been trading. And of course, the elite members know, but at least for those of you on here, you'll get an idea, right? So I have closed. Just looking at our update here, I do have some positions open, mostly oil, but to give you an idea what I still have open, I have Boeing open, again, being very transparent, open with you guys. I have CNQ, ENB, you can look these up, EPD, I have USO and UCO, and Exxon open, right? I also have Delta open as well. I closed last week, I closed quite a few long positions, which was, just bringing it up here, give me a second. A lot of messages to go through here. All right, so yeah, I closed, let's see. Okay, yeah, I closed BPY, I closed Facebook, I've closed Pfizer, I've closed Square, I've closed quite a few positions that had great rallies over the last week, right? And that's just me kind of thinking more of a shorter term, right? Does that mean I'm saying that the rally is completely over? No, I am anticipating a pullback. This can go higher. This can absolutely go higher. I'm just anticipating a potential pullback. And you can see many people are, right? Let's refresh this right here. It says 15 minutes delayed. But, look at just since the last time I updated you, from being down 1.3%, futures have recovered a bit already, right? So we're currently down 1%. Let's see what happens tomorrow. This week is going to be big. This week's going to be really big in terms of the overall direction of markets. Are people going to take profits or are people going to start buying in? Because we already saw a huge buying spree coming in, right? People are like, okay, you know what? I think this coronavirus stuff is done. Majority of the bad news is done. People now look at the 1.8 million or 1.5 million or 2 million cases as just an arbitrary number now. That initial shock of cases going up 100,000, 200,000 in a week has now worn off, right? So you have to be understanding of the broader market sentiment. Sentiment is very important, right? You can't just look at charts and draw lines all day and support and resistance. There's more to it. Of course, you can't talk about market movements and sentiment without addressing the Fed, right? The Federal Reserve, the Treasury has pumped in trillions of dollars into, now contrary to belief, people think, Riz, the Fed is pumping stocks. And they're not doing it, let's just say, directly. What they're doing it in the way they're doing it is they're buying credit products. So they're giving liquidity. They're providing liquidity to bonds, even corporate bonds and junk bonds. What they're doing is they're buying treasury bonds. What they're doing is they're giving capital to these major U.S. banks so that the U.S. banks like Bank of America, Wells Fargo, so on and so forth, can continue to lend to small businesses, medium-sized businesses, and of course, large corporations, right? We've seen many large corporations, whether it's the airlines, cruise ships, they've drawn down their line of credit. What does that mean? They have a revolver. We call this a revolver, not the gun, but a revolver, which is a revolving line of credit. And these are billions sometimes, right? Think of it like your own line of credit if you have one. And these are in the billions, right? And these are directly extended from the bank to the corporation. And let's say Delta, for example, what they do is just because the moment Delta, lost 95% of their flights, right? There's next to no one flying. We know companies like the cruise lines, RCL, CCL, whatever, no one's taking cruises. They're all kind of just sitting there. These massive ships are just sitting there. So what do? In order to get them through this rough patch, they've drawn down the revolvers and taken this credit, right? Of course, it helps that, remember, the Federal Reserve dropped the interest rates, right? They did a 50 basis point cut. Then they did a massive shock, I would say emergency cut as well. So keep in mind, these rates are low. Many of these corporations that have revolvers, line of credits, whatever you want to call them, some of them are fixed and some of them are negotiable. They're variable, right? So these companies have drawn it down. It could be in the billions, and so that they can get them through this kind of crisis, because not everyone's getting a bailout, luckily. I mean, we do know airlines are set for a bailout, and that's Boeing included. It's not an airline, so to speak, but I've mentioned it before. Keep an eye on these companies, airlines, Boeing, to a certain extent. Cruise lines, again, there's great opportunity, but they have more risk. Why? Because we know that the Trump administration has not really been positive on giving these cruise lines bailout or funding directly, so to speak. And of course, people have asked me in Elite, they're like, Riz, how come they've rallied? And I said, that's a great question. The reason they rallied, even though there's technically bad news, airlines are getting a bailout, but cruise lines aren't. That's bad news, right, for cruise lines, but they've been rallying this past week. And the reason is because the market's been rallying, right? So a rising tide lifts all ships. And I said that to one of my students, right? Again, please hold off on the questions for now. I will get to that once we're done. But continuing on, where are we now, right? Right now, let's just assume tomorrow we get a red day, we see a pullback. This week is very important in terms of cases, because we know that, the curve is flattening, right? Are we able to maintain that? There's news that I've heard, I don't know how true it is, potentially there's some people that have had COVID-19, had the coronavirus, they've recovered, but then they have tested positive again. That's breaking. That's something that needs to be verified more. We need more data on that, but that's something I'm hearing, whether it's in China, whether it's in some of the European countries as well. So stay tuned for that. We have to monitor that, because that's a big, scary thing. Because if this can come back and people that have already passed it, like gotten better, well, opens up a whole new bag of worms, right? And we have to stay tuned with that. No one knows exactly what's going to happen in that case. Of course, we also know there's a drug in development. People said, oh, it's going to be a month or two. No, and I said it's going to take a long time. What's long time? 6 months, 8 months. Some said 18 months, right? So we really have to compare ourselves. Before I move on, I want to show you another chart here, and this is the unemployment numbers, right? We know the concurrent unemployment numbers come out each week, right? They're for the prior week. So to just run you through this line, I mean, this is a huge wall of unemployment. It's insane. I'm sure you've seen this before, but what I want to draw your attention to is the data here, right? From March, right? From March onwards, right? The 19th, on the 19th, the was the kind of number that sorry, the date that we're referring to from here, and it was, you know, 281,000 was the actual unemployment number at that time, right? For March 19th. Notice how we get into the middle to end third week of March, 300 is there's an uptick. And then just end of March, remember, this is the reference date. This is for the ending of March 28th, right? It reported on beginning of April, but take a look at that. 6.6 million people applied for unemployment. Then this past week, right? 6.6 again. Take a look at what was projected, right? Projected numbers and actual. Way higher. Take a look at what's expected this coming week. The labor Department of Labor is expecting 4.7 million new unemployment cases, but you know, if this trend continues of being higher than what's expected, I think we could be at 5, 6 again, right? So by my calculations, total unemployment right now is closer to 17, 18 million right now. Okay, that's different from the jobs numbers. Okay, so just keep that in mind. Just a quick stat there for you. Hopefully that helps. Um, Moving on, I still believe that we're going to see a retracement because take a look at what's changed. What has changed in the last week in terms of economic data? Unemployment is still going up. Businesses are still closed. Yeah, we're flattening the curve. Yeah, we're doing more testing and maybe there's more ventilators, which is all good. But ultimately, businesses are still closed. The economy is still stalled. And one important thing we have happening is earnings are starting this week, right? This week starts off earnings season, which lasts about 3 weeks, and it's majority of the large companies in the S&P 500 report earnings, right? This week starts off with key companies like the banks, right? The banks are going to be starting to report this week. It's going to be very important what they say. We all know that, you know, yeah, there's a liquidity problem. Businesses are struggling because they're shut. Most businesses cannot operate, you know, months, 2 months without any revenue. Okay, no business I think is, I would say, created with that thought in mind that, oh, you know what, if my revenues go from XYZ to completely zero, I'm gonna be okay. No, I mean, I hope they are, but many businesses are suffering, especially in the hospitality industry, right? Small, forget Hilton and Marriott and these large multi-billion-dollar chains. Think about, you know, someone who owns like a small motel or a small little, you know, bed and breakfast, right? Especially Airbnbs are getting slaughtered, but either way, that's not a public company. But the point is, anyone in the hospitality industry is getting destroyed. It's restaurants, right? Small restaurants are getting decimated, especially in large tourist areas. So, and this is not just to the US, it's not just in Canada, this is globally, right? Everyone is impacted in tourism and hospitality. So, if that industry goes down, many countries are just simply dependent on that. They're dependent on the tourism industry. And man, I am just kind of waiting to see what happens with some of these economies in different countries because they're going to be decimated, right? Think like Greece back in a few years back, right? So I'm waiting to see what's happening. This lag, right? There's lag. We're not going to know until the next few weeks. In fact, businesses are not going to be opening up for the next week or two. You know, I know President Trump said, okay, by Easter, obviously he has reneged on that, and luckily, I think, you know, he made the right move to extend that kind of soft lockdown, whatever you want to call it. I know some states are not enforcing a big lockdown, but like, you know, states like Washington D.C., New York, California, even Florida now have enacted that lockdown. And only essential kind of services, essential places. So if that continues, don't expect unemployment claims to come down. Don't expect job numbers to get better. Don't expect inflation to be in check. Don't expect the Fed to just step away. No, they're going to do everything they can to kind of support this, and that's good and bad. Okay, I'm not going to get into the broader macro stuff, but ultimately inflation is going to go up. This is why we saw gold continue to go up. Gold is actually trading at about 1742, right, an ounce. $1,742 an ounce, right? It's up because a couple months ago it was 1,600. That's off of a massive rally of 2019. So I hope, okay, maybe you don't agree with me based on your positions. I hope we do get a further drop, okay? Coming down to my main thesis, obviously, hopefully not this violently. Um, Although for some people it may be good. Maybe you hold puts. Uh, but either way, I'm hoping it comes back down at 2,200. Now, one thing I didn't highlight yet is the suboptimal theory too. Look at this. I said that if we break below the 2,200, 2,100 support area, so to speak, for the S&P 500, there is room to go lower. Just like when you break kind of like a ceiling, you can go higher. You break a floor, you can go lower. And I said that, and I've also drawn this suboptimal theory line here. 2,200 or 2,000, sorry, is what I think we could go to next, and that's 2016 lows, right? That's 2016 area. So this is reasonable. If you think about it, the market, okay, not only has gone down from peak to drop 35%, okay, in 2 to 3 weeks, it has now recovered half of that. The S&P 500 from peak, okay, to drop is now only down 18%. That's a lot better than what it was, a week and a half, 2 weeks ago, right? So the market has moved insanely. In fact, if we take a look at the VIX, the volatility index, it's it's gotten decimated, right? Like, and of course it will get decimated. It always reverts back to the mean, which is around the $16, $14 mark, right? But it does spike, right? It spikes. We saw this spike in the end of 2018 during the sell-off end of 2018. Take a look at 2009 for reference, right? Right. This is just the VIX. Again, you don't whatever you do, think you're just gonna buy the VIX and make a killing. No, the VIX will drop. The VIX will come back down. I also don't hold any VIX position right now. Why? Because, and I had before, I shorted it and then we got out. I don't hold any right now because I'm anticipating a pullback. And if I'm anticipating a pullback, what happens to VIX? The VIX goes up, right? When the markets go down or when there's more fear, right? And we saw that tremendous rally from about 16 all the way to 84, 85, getting very close to 2008 levels of kind of fear, right? So bringing it back to the S&P 500, I hope and I think we're going to see a retracement. Are we going to see it go back to 2,200? I don't know. Could we go to 2,000 at some point? Yes, I think there is things to shake out. Okay, don't fall for this mini rally because this is a bit of a mini relief rally. Think about it. It's like a dead cat bounce. Some people are calling it. Some people are calling it a bull trap. Whatever you want to call it. Don't simply just think that, okay, wow, okay, we're past the 2,700. It's stocks to the moon, and we could very well continue this. But I'm telling you, I personally don't see any precedent for it. It can, but I would be extremely baffled if it continues to rally the way it has to last week, right? So please be careful. Am I saying close your long positions? No. Keep things for the long term. None of that, what happens in the last week should change that. Now, if you're like me and you're also trading in the medium to short term, well, this opens up some opportunities. What can you do? What did I do? Like I said, ending last week, I closed most of the short term long positions for profit. So I locked that in, right? I didn't completely go short either because I want to see how things go play out this week. The last thing you wanted to do last week was go short. You would get killed if you went on S&P 500 puts. You went in a bit too early, right? And I get why, right? I get why because you probably saw this drop, right? You probably saw this drop from the beginning of last week and you thought, you know what? Okay, this is going to the 2,200 level again. So many people got caught off guard, and what happened? They missed some of this rally, right? So my main recommendation for you guys, again, I'm not your personal advisor or anything, but just as a general idea or recommendation for you to think about, I would make sure that you have solid core positions for the long term. And then usually what you want to do is let things play out for this week, see how the middle of the week does, tomorrow does, and then what you can do is you can dip your toes back in for starter positions. Take starter positions in great companies. Let's say things go lower. Let's say things drop off and we get a retest of the 2700 level. What's going to happen? Many of these large companies are going to drop too. Remember I said if the market drops, so will majority of the large caps, right? Doesn't matter if it's Apple, doesn't matter if it's Facebook, it doesn't matter if it's companies that have to do with the coronavirus and getting impacted or companies that are have nothing to do with it. They're going to come down, right? So maybe we test 2700 levels, maybe we go lower. If we go lower, your long positions are going to get hurt. So what do you do at that point? You add some more, right? Because think about it this way, even if you get the short-term moves wrong, you still come out ahead because guess what? On average, any bear market lasts give or take a year to a year and a half. And if you look back to 2008, this applies, right? So this applies before as well. So we're looking at decades of data, not just the last 10 years. So a year and a half, reasonably speaking, is what it takes to come back. If you're in the market, you have money in the market, I don't care if it's 5,000, 500,000, 5 million, you should be able to ride this out. If you can't ride this out, then you shouldn't be in the market, right? This is plain and simple. You do not put money in the market that you're not willing to lose, that you are not willing to hold. Now, if you're holding penny stocks, like I've said before, fuck, it doesn't matter what you do at that point. You shot yourself in the foot anyways. But if you're holding solid companies, now I'm talking about solid fundamental companies that aren't going anywhere. You got the Apples, you got the Facebooks, you got the Walmarts, you got the McDonald's of the world, you got Starbucks, right? You got companies like Nvidia, you got companies like if you've been paying attention, there's some great stuff that you've probably seen on my watch list, right? My traders and my team get access to my watch list, but there's so many opportunities, especially in energy, right? Speaking of energy, I promise we're gonna talk about oil, and let's do that, right? We know that OPEC plus, Russia and whatnot, Mexico, there was a bit of a hang up. The team in Elite have been monitoring this very closely, and take a look at this, right? Oil was up about 1% when I started this webinar. It's now up about nearly 4%. So these are oil futures, right? Take a look at it taken up, right, from today. I'm long oil. I've been long oil. I just told you earlier, right? I had USO. I have USO. I still have it. I have Exxon. I had Royal Dutch Shell for the trading account. Closed that for profit, right? So take a look at this. We could see a huge recovery in oil, right? I'm bullish oil. Oil at $22 a barrel, $23 a barrel is still not sustainable because shale goes offline. I've said, majority of fracking goes offline. So it makes no sense for oil production. At some point, production in the US at least is cut completely. Only Saudi Arabia, Venezuela, countries like that are pumping because their cost is so cheap, right? It's literally like gushing out of the ground for them. So for those countries, they'll continue to produce, but I genuinely believe every country wants oil to be stabilized around the $50 to $40 area, right? I wouldn't say $80 is feasible anymore. I know we had many years back oil at $100 a barrel, and that was excessive because that puts a lot of pressure on the consumer, right? At $100 a barrel. But I genuinely believe $40 to $50 range is doable, at least in the next few months, right? Don't expect a straight line like this above. No, right? I think it's doable in the longer term, right? As we going into Q2, Q3, Q4. Just this year, I think we could stage a good rally, especially as we get into the summer months, especially hopefully as these coronavirus numbers, all the stuff that's going on, that's taken the world by storm. Everyone's lives have been impacted. I don't care if you're a billionaire, if you make 20,000 a year, doesn't matter where you are. Everyone's life has been impacted, including mine in some way, shape, or form, right? Many of you know, like just personally, honestly, I'm not worried about, for me, I'm very fortunate. I'm not worried about the money side of things, but I know many people have been laid off. They've been furloughed. They don't know when they're going to get back to work. Yeah, the Fed, the Trump administration and Congress has kind of pushed together a bill to give people a check for $1,200 and maybe a few hundred for a child and whatnot. But that's not enough. That gets you through 1 month maybe of fixed expenses. Most people in New York they won't even cover half their rent, right? If you're in California, same story. So this is a really tough time for people. So understand that I would say the sooner we get through this, the better for humanity. I think everyone comes out better from this, hopefully closer knit. So getting back to oil, I think oil can stage a recovery. We'll just have to wait and see. There is no precise answer, in 72 days we'll be back to $50. No, there's nothing like that, right? We have to wait and see. All we know is there's a lot of potential. So I'm not telling you what to do. I'm not telling you what to buy or sell, but that's just my personal stance. And I put my money where my mouth is. I have a significant amount of oil holdings, and I'll share some of my gains. I'll share my losses too. To me, it makes no difference. Again, I'm not married to a position, but I am bullish oil and energy stocks, especially after the sell off. Just to give you some context, let's bring up Exxon. There's many oil majors, but Exxon, recovering, but big sell off. You can look at Royal Dutch Shell as well if you feel comfortable with that. There's many pipeline companies. EPD is definitely one of the most strongest U.S. based pipeline companies. It's been hammered. It's a fantastic company. The dividend yield is now 10%. That's insane, right? And I don't know if they're gonna trim it or pause it, but I think it's relatively safe. The company is very solid, and there's many on the Canadian side as well. Enbridge, which is a Canadian company, but it's also listed on the U.S. exchange. This is one I hold as well as TRP, Trans Canada, or TC Energy now. So again, I'm giving you some ideas to think about. I've mentioned them before. A lot of people are still very interested in the airlines, right? I hold Delta right now. As I mentioned, I still hold BA as well, Boeing. I'm currently in the red on both those positions for transparency, but I'm okay holding. I don't think Delta goes anywhere, especially after the Trump administration. Said they're okay with giving some of these airlines a helping hand, so to speak. And Boeing, I think, is also going to be one of them. Boeing has taken on some business consultants, and they're kind of weighing their options for funding. Does it make sense to take funding from the U.S., right? Does it make sense for them to take a bailout and the terms, or does it make sense to do their own private funding? Right, they're in the works for that, right? So Boeing is another one you want to consider if you're looking at natural resources. CNQ is another Canadian company, but also listed on the U.S. exchange. Another fantastic company. Dividend yield is 9%. Again, these dividend yields have gone up crazy because the stock prices dropped, right? The dividend yield for this, just a month ago was around 4%. So the yield has gone up, meaning your return just via dividends has gone up to about 9%, right? If you entered now, right? If you entered at around $7 with kind of the low at 8, well, guess what? Your yield probably would have been about 12% or something, right? So, no harm, no foul. Don't think that you've missed the boat, okay? Things could go lower. So none of us know where it's going to go. So what do? We take strategic entries, right? Let's say CNQ, you entered right now, and you entered now, okay, at $14. Let's say it does go lower. Okay, this is a solid company. It's not going anywhere. You can look at the fundamentals and financials if you want. Maybe you add more at 10. Maybe you add more around the 11 area as well. So what you're doing is you're dollar cost averaging. This is not some secret type of strategy. Okay, this is common sense. Look into it. It's dollar cost averaging in, scaling in, many words for the same thing. Okay, so I highly recommend you do that no matter what. No matter what. I already have a 7-figure portfolio that does this already. Okay, that holds solid companies. I'm not worried about, of course, I also have a trading account, a couple trading accounts as well on the flip side, right? That's where I'm really trying to squeeze out that alpha for the short term, right? So that's my viewpoints on the markets. I think we do see some things go lower this week. I can be wrong. Let's see if we can break below this 2,700. Okay, that's going to be key. If we break below the 2,700 and we start getting back to the 27, at least 26, 25. Wow, I think we can go lower, right? We can go lower, and then it's a yin and yang. I'm not gonna say the main thesis in play because currently it is not in play anymore. We passed the 2,700, but if it comes back down, we didn't have enough sustaining power to stay above the 2,700. So the main thesis comes back into play, right? we may see 2400. Take these opportunities to buy. The US isn't going under. The US consumer isn't going under. Capitalism isn't going under. We know the Fed is supporting this. We know the Fed is literally coming in with the floor and saying, you know what, we're going to just keep pumping money into this. The credit markets, okay, they're not buying stocks directly, they're pumping it into credit, like I've said before. You already know you have the backing of the Feds. The Treasury is printing money. We know the Trump administration, Congress, the Senate is on board for stimulus to give the consumer sort of a cushion, right? So you can't go wrong riding this out with amazing companies at these levels, because think about, although many of them have recovered quite a bit, think about Apple, right? They've dropped in a span of a month, from peak 35%, similar to the market, right? You have companies like Nvidia that had dropped very similar, again, about 35 to 40%, 42%. You have companies that literally almost halved in a span of 2 to 3 weeks. And sure, maybe you missed it. That's fine. It's not the end of the world, right? Don't kick yourself up thinking, oh, I missed the bottom and it's over. No, Nvidia at 260 is still a great price. Would I buy it just now? No, simply because I'm waiting for things to see out, but how they go. But you cannot go wrong buying great companies at great prices. And even if the price isn't great and it's still good, guess what? You're okay, right? Many of the companies I've mentioned pay dividends, right? Enbridge I mentioned to you, TRP I mentioned to you, they pay dividends, right? Enbridge has an 8% yield right now at current prices. TRP about 4%, right? So, you cannot go wrong. Don't go buying something like, I don't know, I don't really have, one thing I just saw it, Planet Fitness. I'm short this, okay? I'm short this. I continue to remain short. You could see a big 6-7% move on Thursday, and look at this candle. It's like, you know, it's a really really indecisive candle, and I think if tomorrow is a red day, we should just see this come back down, right? So again, I have some small positions for short. Again, don't hesitate in taking a look at companies like Facebook. A lot of people are asking me about banks as well. Banks have really kicked off a good rally, but just keep in mind they will move based on how, for example, JP Morgan reports this week, but how they do on their earnings or what they say in terms of guidance will impact, Wells Fargo, right? Even though their earnings aren't going to be till the same day. So there's going to be sympathy plays, right? Understand that how they do on earnings is going to impact not only the banks but also the market, right? Another company you want to look at, AT&T. You've all heard of these companies, right? None of these companies are some secret company that's gonna, you never heard about, right? These are companies that you know and you love or you've heard of or you use their products or services, right? AT&T is a great buy. Sure, they have a lot of debt, right? They have a lot of debt, but I think it's relatively safe. Again, another one is Boeing. This one is going to be great or absolutely horrid. It's going to be one or the other. I've said it before, but I have six figures in this company right now. I'm red right now, but I'm smiling. I'm laughing because if I'm not that concerned, then why should you be? Maybe you don't have six figures. Maybe you have more. Maybe you have less. It doesn't matter. You got to approach it from a confidence standpoint, right? Is Boeing a company that manufactures some of the most commonly used aircrafts in commercial and private flight, in defense? They make missiles. They make, stuff for the U.S. Defense Department, right? You think they're gonna let Boeing go under so that the U.S. can buy missiles from, some other country? No, right? You have other defense companies as well, but Boeing is the most exposed right now. So this is a great opportunity. The market has discounted Boeing significantly. Of course, they had a whole 737 fiasco, right? Sure, there's problems with the company right now. They don't have any revenues right now. Same with airlines. But this is an opportunity for you. Could this go lower? Absolutely, right? My cost basis is I'm right around break even right now, right? So this is a big trade for me. Up to you. You don't have to join me on this, or I don't really care what you do. But this is something I'm telling you. I hold my cost is about 150, 155. Right? And I've scaled in. If you think I just simply just bought at one point, no, I scaled in. I didn't get the bottom. But guess what? I bought around here. If this is my cost, it went lower. Okay, it happens, right? I didn't get shaken out. I could have easily gotten shaken out, go from about average cost basis to about 150 to here, losing another $50 per share. That's meaning halving the 100,000 that I have in. That's a tough pill to swallow, right? But we'll come back, right? Can this go up further? Absolutely. So if you think you've missed opportunities, you haven't in the grand scheme of things. I just want you to be patient. Never go all in because this thing, not just Boeing, the market can go lower. All right. So I'll leave it there. Let's kick things off with some questions. All right. I appreciate you guys sticking around, attending these. I know you've held off on the questions, but let's start with some questions. What's my favorite bank? Well, I don't hold any banks, but really you can't go wrong with any of the Canadian banks. They're all solid, relatively speaking. RBC, TD, um, they've taken a big haircut, of course, but I don't think you can really go wrong if that's your kind of play. Then again, I personally would even consider, Bank of America, Wells Fargo, right? They have earnings, so be careful of these catalysts, right? Because that will increase a lot of volatility. Something to consider, right? I personally don't hold, so that's me being open with you and telling you I don't hold currently any banks, but that doesn't mean that it's not a good opportunity. Okay, APA. This company. I think someone asked me about it. I'm not a fan. I mean, they're a small E&P company. Again, these companies are going to be impacted the most with oil at $20, right? Or oil at $25. And you can see why the price has gone from 26, 25 to $8, right? Because the market knows that, wow, these guys are screwed. These guys are screwed if oil price doesn't pick up, because what are they going to do pumping oil out of the ground, running these operations, fracking, oil sands, shale, whatever it is? What are they going to do if their cost is $30? Why would they do all this so that they can lose money for every barrel that they produce, right? So keep in mind, there is some positive upside to oil. There is positive upside to these. If oil continues to move up tomorrow, right? APA, Exxon, all these companies can go up, right? Am I a fan of this? No. Do I hold it? No. Moving on a macro level, how do I think this whole situation will affect the economy? It's already affected the economy. It can get worse. Okay, it's as simple as that. What do I think about gold? Gold is great for an inflationary play. I think inflation will continue to go up. The Fed targets a 2 to 3%. Again, it's a wide range. 3% being the ceiling for inflation. I have no doubt that inflation is going to go up in the next coming months. Again, this doesn't happen instantaneously. This takes time, right? The reason why inflation may remain where it is now because people are not shopping as much, right? Inflation is what? It's the CPI, right? The pricing index, where how much does it cost or how much more does it cost now to buy a bag of milk or so on and so forth compared to last year. So understand inflation is going to be a little bit muted for now. I think it can increase going forward, right? Just from a macro point, right? Do I think what do I think about gold in terms of where it can go going forward? 1700, I think, is per ounce, as I mentioned, is still a bit too rich for me. Like, I don't like gold for any other reason besides a hedge or besides a hedge against inflation. As I said, it's not really a safe haven. We've seen gold tank as well with the market, and then it just had this crazy move. Like, gold has moved like crazy, right? The futures market on gold has gone absurd. I just think it's way too extremely priced for me to enter now. I don't hold any gold positions currently, whether it's directly, whether it's futures, whether it's ETFs tracking gold, or whether it's gold miners. I don't hold any of those. All right. Mostly, someone asked, most banks and pharma reporting this week. Do I expect them to move markets significantly? I think we see more volatility this week, absolutely, with earnings coming in. Right. This is one of the most unprecedented earnings seasons in the last 10 years. This is the biggest question mark area, over a decade, because none of us, I don't know about you, none of us have gone into or gone into looking at earnings, and CEOs have not had to provide guidance on a pandemic. They've not had to provide guidance on zero revenue, or like revenue going down 95% in the case of airlines. Like, they just haven't had to do that. So what they say on these earnings calls, what the transcripts say, what the numbers are released will be huge. I think we see more volatility this week, right? Exactly what happens, who knows, right? Uh, Another question: do I mess with the leverage ETFs like DGAS, UGAS? No. Um, I mean, UCO is one that I've traded. I got hammered on it because it decays so much and oil got destroyed. Um, you know, 20% drops in a span of a week are unprecedented. I've never seen that. Never seen such a large intraday drop in oil in my entire life. In fact, the last time there was such a large intraday drop in oil was 1991, the year that I was born. So that's a fact. Uh, it's unprecedented. It's crazy. So yeah, I got destroyed on my UCO long position from 3 weeks ago or something, because it just went like just decimated. Right. This is where like that 20% drop came in right here in oil. Right. So yeah, and that just destroys these leverage ETFs, right? UCO is a leverage ETF, so uh, I can't recommend trading these unless you've got a strong stomach, and if you want to ride this train right now, wouldn't be too bad. Okay, Pfizer looks promising because of a possible discovery of the vaccine. Yeah, I think Pfizer's great no matter what. I mean, even if they don't figure out a vaccine, or maybe they don't figure this out. It's an amazing company. It's not going anywhere. Sorry, I brought the wrong thing up. Here we go. It's an amazing company. It's not going up anywhere. I think there's tremendous upside in the long run. Could it curl over along with the markets going down? Absolutely. Right? It could curl over just like every other large cap. All right. So yes, I think your thesis for 35 entry or so, getting out around 40. This 40 is a bit rich in terms of getting there. I mean, $5. You have to remember, you have to measure your move. 35 to 40. Is this thing gonna go up 13%? What's your time frame? What's your time frame? Right? If you're thinking this is gonna go up 13% in a span of a week, maybe it does. I don't think that's very likely though. Okay, so remember to gauge your profit targets and whatnot. All right. Another question: is it good enough to invest 500 every month? Absolutely, absolutely. If that's what you're working with, yeah, if we're investing, you are able to scale in it. It's a lot better. If you were looking to trade with that amount, I'd say no, build up that capital, right? 500 is not realistic. You can, but it's not realistic. Okay, I just think if you're investing, absolutely 500 a month, 200 a month, systematically gives you the opportunity to buy great companies and reassess what the situation is. The situation could be quite different a month from now. It's maybe worse, maybe it's better, right? And you can take advantage of that. Someone asking me SPXS inverse ETFs. Yeah, I trade inverse ETFs once in a while. SPXS is one that we've traded. You know, right now we used it as somewhat of a hedge for our long positions. Yeah, if you feel you want to play a pullback in the market, absolutely, you could buy the SPXS instead of shorting the SPY or buying puts on the SPY. SPXS is something you can buy as an inverse play on the index, but just be aware because it's leveraged ETF. Don't hold it too long. Okay, there's DK. Planning to buy CCL for long term. What do I think? CCL is one that I've been asked many times, along with RCL and all these kind of cruise lines. They're all kind of looking the same. The kind of chart looks the same, very same. Look at this, right? See that? Very much the same, right? There's Norwegian cruises as well, but either way, I think these things are a very risky, but also a lot of upside. It goes both ways, right? There's more risk in this, but of course, it has the potential to come back. I would not buy this thinking, hey, Riz, I'm buying it at $13. It's going to come back to where it was before, 52. Sure, it can, maybe 5 years from now, right? Don't expect these kind of things just because where it was before, okay? Don't be fooled by that, and I get why people think that, but don't be fooled by that. If you get in now and this sucker rallies from here to like, fuck, even $20, take the fucking money. Okay, take the money if it happens in a reasonably short amount of time. If you really, really are adamant and you think, oh, I'm riding this cruise ship to wherever, then you can continue to hold and see, if you go into the 25s, 28, 30. But don't hold this till the end of times thinking, you're going to get that 52 level again and it's going to be a 300%, 200, 320% rise to get back. Okay, this is where numbers work. I've shared this in social media where if you have a 90% drop or something and 83% drop in this case, you need a 300% rally in this case to get back to previous levels, to previous highs, right? Even more. So keep that in mind. What do I think about WPG? Washington Prime, real estate investment trust. You know, Again, many REITs have gotten hammered simply because there's a liquidity crisis. Many people may be defaulting, so there's especially mortgage REITs, right? So this one I'm not too familiar with, but it's too small of a company for me to kind of bother with. I mean, look at it, like it's a dollar for a reason. Yeah, it has large moves, but the market cap on this is 186. If I listed my company, okay, Riz International, I'd have a larger market cap. Okay, so let's distinct like the dividend yield is 50%. The dividend's not sustainable. There's no earnings. I can't in good conscience recommend this. There's plenty of better opportunities. I don't care if it's a $1 stock or $5 stock. Just I'm not a fan. Okay, hopefully that makes sense. Again, I apologize for if I'm being a bit too brutal or blunt, but yeah. Any other questions? We're almost at the hour mark. I hope you guys have enjoyed it. Um, I appreciate you guys coming on again. I do enjoy these a lot. It's always great to kind of interact with people, answer questions, kind of give you some insights on into how I think and what I think of these things. TOG, TOG, what is that? Canadian company, I'm assuming. Torque Oil and Gas. Again, another tiny company, guys. There's no earnings. They're gonna get decimated if oil doesn't recover. I'd avoid such small companies. I'm not too familiar with this, right? They've reduced their monthly dividend already. It doesn't get. These things will have explosive moves. If you're looking for explosive moves, sure, okay, like they can have explosive moves, especially if oil recovers. But as someone who needs to know that the longer you hold this, the more at risk you are, because these companies can go insolvent like this. All right. So just understand that. Someone asked me, Lockheed Martin, great. Yes, LMT is great for long term. It too got sold off. Again, it had nothing to do with the coronavirus. Missiles can't get coronavirus. F-22 Raptors, F-35 Lightnings can't get. Again, for those of you that are aircraft aficionados, you probably recognize those names. Those planes cannot get coronavirus. Missiles and lasers and anti-air weapons and all this does not get coronavirus, yet they got sold off with the market. This is what I mean. Some amazing opportunities were there. They're still there. They're still there. Doesn't mean you've completely missed the boat. See if things come back. If things dip further, take that opportunity to scale in, right? If it fits your investment risk tolerance and time horizon. Okay, great company. If you're a short term, someone's just replying to someone else. Will we fall into a depression? This is a tough one. There's a lot of people. I don't like to go for such headlines. I know there's exact headline is like potential for depression, potential for a great recession again. And I don't like these kind of headlines because no one knows. Doesn't matter who you are. No one knows how this plays out. Everyone is doing the best they can with what the situation they're in, whether it's the Fed, whether it's President Trump, whether it's me, whether it's Warren Buffett. We're doing the best we can with the situation we're in and the information that we have. Is this precedent for going to a depression? I don't think so. I mean, 1920s was the last depression. It's a really different time, okay? Very much different time, all right, to 100 years ago, all right. Now, in terms of a recession, yes, I think we can go into recession. It takes time to go into recession, right? It takes time. We need two consecutive quarters of GDP drop, and I think this we're already projecting a GDP drop for this first quarter, continuing into the second quarter, right? Numbers haven't released yet because we just finished the first quarter of the year. But you'll see GDP numbers get revised lower. You'll see actual GDP numbers come in lower. So yes, there is an opportunity for a official recession to happen. A Great Depression or a depression or something like 2008. I'm not saying that's the case because this is a very different time. We have to understand because the coronavirus came on so fast and it shut down everything so fast, the reverse can happen. If things get better really quickly, we flatten the curve, hospitals aren't packed anymore, people are getting better, maybe us human beings develop some kind of immunity, maybe there's a good vaccine or some kind of thing that helps you get past this or get better relatively quickly, even if it's not a vaccine, guess what? Normal life can come back very quickly. So the whole concept of depression and going into recession, it can happen. I just think that we need more time. We need more data. Okay. Top ships. I'm assuming that's not. I don't know. It's fucking garbage. I think this is the one you're talking about. Top. It's just yeah. I'm not. I don't even know what to say. I'm not thrilled with this one. Caleb asks rental car company car. And I don't like automotive. Fuck. Wrong thing. I don't like car automotive companies right now, especially right now. Okay, whether it's rental car companies, whether it's Ford, GM. I just don't like the car manufacturing sector now, and I haven't for a while, and that's a good thing because they've all gone in the dumps, right? So that's just me. Someone also asked about why don't I like investing in banks. It's not that I don't like. I just personally have other opportunities. I rather go into other things, right? It's a very personal preference, I think. I'm not saying like, oh my God, like don't invest in banks. If it's suitable for you and if there's opportunities like there are kind of now, sure. I just think banks are going to be subject to quite a bit of pain because guess what? They are the most impacted when the economy stops, period, right? I'm not saying there's going to be a financial crisis or anything like that, like last time, which was, incurred due to the banks, but the banks will be impacted anytime there's a slowdown, anytime, because guess what? Lending will continue to get dropped off. Businesses will continue to slow down. There's going to be more defaults. There's going to be more, what's it called? What's the thing where people foreclosures on their houses? So these things are all going to happen if the economy halts completely for a long period of time. We already saw, I think, like 12% of people in the U.S. or something didn't pay their rent this past month, something like that. Like, you think that's gonna get better really quickly? I don't think so. Not until people get to go back to work and feel relatively good about it, because it's gonna take time for people to get confident in going out and interacting or shaking hands with people. I don't even know if people are gonna be shaking hands for quite some time, right? So that's my 2 cents. In terms of shorting REITs, I would avoid it right now. If you're feeling really gutsy, sure. Again, it depends on the REIT because some REITs are more exposed, right? If you have some REITs that are commercial REITs, they're more exposed compared to residential REITs, right? There's mortgage REITs that are way more exposed to this, right? Because all of a sudden, if your main business is giving mortgages to people and mortgages dry up, credit dries up, no one's taking on new houses, mortgages. In fact, people are defaulting on their mortgages. Guess what? You're going to be impacted. So if you're feeling gutsy, you can short mortgage REITs, but guess what? Most of them have dropped significantly already, right? Because the market is fast. The market is really, really fast in taking these things that occur, whether it's hedge funds, pension funds, whether it's the investment banks, whether it's no matter what, the market is very, very fast to react to numbers, to data, to information. That's why I say a lot of things become priced in very quickly. So if you've seen a mortgage rate drop 80%, 90%, how much more do you think it's going to drop? Sure, it could go to zero, but you've missed the meat of the move, right? So that's my 2 cents. I hope you guys have gotten something out of this webinar. We'll leave it there. Thank you so much for joining. Always a pleasure doing these. Let's see how things go. I can't say we're going to continue to do these each and every week. I know there's been some requests to continue these every week. I can't promise that. I mainly started doing these from 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 the end of February, beginning of March, because of the kind of time that we're in, to kind of set people at ease, give them some insights if they're willing to listen, or if they want some more information from someone who does this each and every day. So hopefully these are useful for you guys. Stay safe out there, stay healthy. Again, remain positive, continue to learn, invest in yourself, continue to think long term. And I've said one thing, I'll say it again here. I've made some great investments in my lifetime. But the greatest investment I've made is in people, right? That's something I say quite often to my team and members. So, I thought it'd be prudent for you to know. I enjoy doing this. I enjoy investing in people. People ask me all the time, why do you do this? Why do you spend 10 hours, 12 hours a day answering messages and going through all this stuff and dealing with it when you could be doing anything? The simple answer is I enjoy it. I'm passionate about it. I live a simple life. I don't have anything to prove to anyone. So life is boring. Life is too short and boring to just try and only thing you want to do is make money and buy shit, right? Don't get me wrong, I love cars and bikes. I mean, you talk about cars and bikes, my eyes light up, but there's only so much of that you can do, right? So I enjoy this. I enjoy interacting with people, going on this journey through markets with others, because it's a very it's an isolated, like, it's a thing that you do on your own, right? Trading is something you do on your own. Maybe you do with a group or whatever, but it's something you can do from anywhere. You can do, from the comfort of your home, in a room or office. But when you do it alongside others, when you have others to interact with, it makes it so much more enjoyable, so much more rewarding. All right. So I enjoy what I do. I'm very fortunate, very lucky, very blessed to do this. So, and of course, I have you guys, joining these things and following us on social media and joining our services and learning from me, listening to me, interacting with me. So I appreciate that. I think it's, one of the best things I've ever done in my life is, like I said, invest in people, give my time to people, because I've learned so much, right? Either way, thank you so much for joining. Thanks for listening. I appreciate all of you. Stay safe, stay healthy, and let's see if maybe we do one next week as well. And we'll go from there. All right. Take care, guys. Have a good one.